Our next guest, joining me now, is Dana Telsey, CEO of Telsey Advisory Group. Dana, starting off with Gap, I mean, not including the impact of tariffs, I guess it's sort of tough since the goalposts keep moving here, but we got very different types of companies reporting here. You got Gap Apparel, we got Costco, which is the membership, and how should investors see opportunity versus danger here?
I mean, you have to look at some of the names and say, what does the outlook look like? And you have to think about tariffs in some point of view, given the fact that whether it's price increases, diversification of sourcing, it'll be there. When you think about Gap overall, not including the tariffs, basically the investors and the analysts will include something for tariffs, when meanwhile their results that they gave, they had very good comp store sales for the Gap and Old Navy divisions and continued to gain market share. The Ulta numbers probably were the standout so far because the Ulta, frankly, they not only raised guidance, beat the comps, they had better margins. It was very encouraging, certainly, and they saw increases in average transaction and traffic. You think about Costco, we all knew the sales already because they put out monthly comps. It really is the bottom line EPS, which they beat consensus also. And when you think about these value names or where consumers go to, Costco is one of the locations and destinations where they do rely on. So I think, and overall, American Eagle, one last one, their numbers are weaker than expected in terms of the guidance. They had already delivered the setup last week when they reduced their expectations for Q1. That is certainly a wait and see. I think that there's more opportunity in Abercrombie in the near term, given the resilience that that company is having.
Well, Dana, since you mentioned it, we are thinking about Costco because the earnings are out, as you mentioned. Our Melissa Repko has those numbers. Melissa.
Hey, John. So the stock is not moving much, but Costco posted a modest beat on earnings. It's roughly in line when it comes to revenue. It reported earnings per share of $4.28 compared to the $4.24 that were expected. And as I mentioned, revenue came roughly in line at $63.21 billion compared to the $63.19 billion expected, John.
All right, Melissa, thank you.
Thanks.
Dana, how long can Gap hold its breath, I guess, is my question around tariffs. It sort of seems like they're saying we're not anticipating meaningful price increases now, but here's the size of the hit to net income from tariffs. I mean, eventually, either they raise prices and demand reflects that, or they don't raise prices and the profits go away, right? Or the tariffs go away. How are you gaming out who's got the capability to withstand that pain and who doesn't?
I think overall, right now, are tariffs going to be here or not? We have this price tracker that we put out every week of around 80 items, and we haven't seen the prices increase yet. When you game out what you're going to have happen, any of those companies with product newness and innovation can be able to garner price. And look what you saw from the Tapestries of the world, even the Levi's of the world. You're able to get some price on newness. What you're seeing with Gap, with the newness and creativity, like Gap Studio, like the occasion wear at Old Navy, like the fact that they're going to get the benefit of the trade-down customers, there's opportunity to gain share even if they have to raise price a touch. And I think you'll first hear about that. It'll be third quarter and fourth quarter when that'll be there.
In your estimation, who's got the best sort of sourcing manufacturing advantage based on where they already have that capability outside of China and other high tariffed places?
Two companies, Birkenstock, given it's Germany and Portugal essentially, and obviously you don't know about Europe in a real way yet, and then it happens to be Bath & Body Works, given that over 80% of their goods are manufactured here in North America.
Well, it seems like if you're like putting it on your face or spreading it on your body, maybe it's doing a bit better. I mean, you mentioned Elf and Ulta as well. Why are they avoiding so much of this trouble?
I think there's a couple things happening. There's newness. You look at the newness that Ulta has delivered, Milk Makeup this quarter, the new hair care line by Beyonce. It definitely is attracting consumers. And also, when you think about what's been said in the past, it's the lipstick factor. It makes people feel a little bit better for not a high price, and beauty definitely is working. You look at the Disney Princess collection with Bath & Body Works. That's why they delivered the 3% sales increase this quarter.